Hello, and welcome to another day of TA the Degen way. Well, what I want to take a look at today is this updated version of an older chart. Here we are looking at our TradingView Ideas page. There is a link in the description. If you haven't done so already, go ahead and hit that like button, subscribe button. And if you want to follow us on TradingView, there's a link in the description. Also, I have a link to our free Discord where I am discussing just what I'm doing in real time as far as Bitcoin and crypto goes. But what I want to focus on is this chart right here, which is degrees of BTC, where I'm looking at the rate of diminishing returns of Bitcoin, and just do a much needed updated version and explanation of what I was trying to show here back in March of 16th, 2023. So I just want to do a breakdown and just a better representation of what we are looking at here. So what do we want to look at on this chart? Well, what we are looking at is the law of diminishing returns. And I want to look at the consistent rate of decrease in percentage gain from bull run to bull run. Those are those green angles on the chart. And I want to take a look at the time factor of how long from bottom to top, and what my personal target would be if the same pattern actually was to continue. So that is what is on this chart. So what do we have here? So here I've just snapped a line from bull run low to bull run high, bull run low to bull run high, and so on and so forth. But what do we see here? Let's click on it. Now, I mean, I've adjusted this here so that, it's easy to see the equal differences. So, I mean, this here, at the actual degrees doesn't matter. It's the rate of change. So here we got 75 degrees. Here we have 59 degrees. So we lost about 15 degrees. Here we've got 46. So again, we've lost 15 degrees. Here we've lost 15 degrees. So we went from 75 right here to essentially 60, essentially 45, essentially 30. I mean, come on now. What would be next in the chain? 15 degrees. And what are we seeing bull run to bull run from not our low? I mean, I understand that there's more X's if you were smart enough to buy the bottom, but we're looking at how much we're actually gaining in value as to how much higher can we expect Bitcoin to actually go. I mean, I don't know. Anybody that says that, it can't go to $1 million, I mean, sure it could. But what are we seeing here? I mean, we are seeing diminishing returns in time versus price. None of these are exact measurements in days and X's. This is just a rough visual representation of approximations of what's going on. Now this right here, in matter of degrees, that's not an approximation. That's from bull run low, bull run high. You are losing 15 degrees of time versus price. It is taking longer. So here we have 550 days it took to get to this high, approximately. Here we have about 770 days, approximately, from bull run low to bull run high. 835 days from bull run, well, right here, to bull run low to bull run high. So, I mean, here we've got about a 200-day longer, and we went up 40x from this high at $30 to this high at about 1,500. And next run, it only did a 17x, and it took about an extra, 60 days longer. This was 770 days, so this was only 60 days longer. This one. What do we do from this high at about 20,000 to 64,000? Well, it's about a 3.5x, and it took 987 days to get up there. So that's again from this bull run to this bull run. That is about 150 days or so more. Now this curve, what is this curve? All I have done with the curve tool is I've just set it here. Well, let's just redraw the curve, because the curve is not some exact science. I mean, like, these are approximations for expectations. So let's go over here and grab our curve tool. Let's set it right at the bottom. Let's go to our last known high in the cycle. And now let's just adjust it to fit. This is the rate of change. Just get the best fit that you can, and you shouldn't be looking for some exact number. I mean, all this is really showing you is just that you are looking for this generalized rate of growth. This should be at about 64,000, because that was, 64,000 was our last high. 65 is even a little higher, And we're pretty much catching these tops here. We could probably do just a little bit better. Which gives us a high of around, where we're at now. Even if we continue just to follow this rate of decay, you're looking at like 125 to 150,000 until this thing has essentially flatlined as far as the rate of increase from bull run to bull run. So, that's all I wanted to point out there. It's just that there is a consistent rate of decay in returns from bull run to bull run. It is losing 15 degrees of time versus price following this specific fitted growth curve. So if you're looking for more than this, what is diminishing returns? That doesn't mean that we can't get it. So here, just Google law of diminishing returns investing. What does AI say? The law of diminishing returns is an economic principle that states when investment in a particular area increases, the rate of profit will eventually decrease. This is because after a certain point, the resources being invested are spent less efficiently. Basically, over time, you need some new catalyst to make this worth more, or else all that are going to get in are in, And the rate that people are getting in beyond this bull run high to this bull run high is becoming less and less and less. And your big events are having less and less effect on raising the price. So, when I say know your environment, that doesn't mean that Bitcoin can't go higher, but it definitely means that it is diminishing seriously and drastically in its rate of returns. And by that I mean it is gaining less per bull run and taking longer per bull run to make significantly less gains from run to run. Well, that's all I got for you. If you like this kind of content, go ahead and hit that subscribe button. And if you're curious about how I view the market or what I am doing on a regular basis, feel free to join that Discord. But until next time, trade well.